we are currently in the last phase of our 5-year-old for some of our properties, actually 3 of them. What are the things that we're already doing to ensure that we optimize the sales of that property? The strategies, if I'm just starting out in the sense that I just bought the property and my business plan is 5 years, is slightly different from when I am 1 year or 6 months towards the end of my exiting. So the strategies are kind of different, but they have some commonalities or some similarities. I'm going to just talk on a surface level or high level. If my goal was to hold on to a property for 5-year plan, what are the things I'll be doing at the beginning, a year or 2 towards the end of the sales of the exiting of the property? What are the things I need to be doing? Some of the similarities, respective of if it's 5 years or 6 months towards your exit strategy, I always make mention of this. You make money when you buy. So irrespective of if it was 6 months or 1 year, this whole entire process starts from the beginning. So the strategies all start from the beginning. That is, if you decide to do a value add like introduce renovation, all those things will have to start. Your financials must be good from the beginning. That is your rent roll, your profit and loss, your business plan execution, your property management plan execution. All those things must start out from the beginning, regardless of if you have a 6 months or a 1 year towards your exit or a 5 years towards your exit. For those that are new towards this, when I mean exit, I mean the time that you either refinance or sell a property. I've spoken before about exit strategies in my previous videos. There are different exit strategies, so it's not just limited to refinancing and sales, but I'm going to use it for the purpose of what I'll be discussing to emphasize more on refinancing or sales or selling of a property, like I just mentioned. So those are the things, irrespective of the time, that you need to do. Since we'll be exiting in 6 months or 1 year from now, what are the things we are currently doing to ensure that we optimize the value of that property? So number 1 is the capital improvement. During this time, 6 months or 1 year towards your exit, you want to ensure that you're not doing an heavy capital expenditure. You want to avoid doing that. This is a period for tweaking or cosmetic renovation, surface level renovation, nothing too expensive. All you're doing is just to make it appealing to whoever the buyer might be. This is a time for you to do that. You want to ensure that you're spending less on capex projects because, like I said, you make money when you buy, not when you sell. So you should have started your execution of your business plan from the beginning, from year 1, year 2, or year 3. Those are the period where you need to do all those heavy capex, like replacing of your roof, doing all those things, interior renovation. Towards the end, it's not for that. You have to stop that or pause it and do some cosmetic renovation. The purpose of that is just to make it attractive for whoever the buyer might be to look at it and find it very attractive. So the next one is NOI optimization. At this stage, because you've been improving on your net operating income, that is increasing rent and reducing your expenses over the years, what you are trying to do in the last 6 months to 1 year is to ensure that there's stability. That is, if you still have some market rent to catch up with, you're going to do it in a very modest way. You want to do things in a way that you will be pushing rent and you will not make your property vacant. That is, you will not be super aggressive. You'll just be catching up with the ones you can catch up with. But the bottom line is stability of your net operating income. You want to ensure that it's stable because you've been building it over the years. That is not the time for you to start being aggressive in pushing rent because it might backfire and lead to serious vacancies. So the main purpose here is stability of your NOI and catching up with any other rent that can help improve your net operating income, but not in an aggressive way. Our main idea of investing is educating our investors because we believe that if you are properly educated or you're well informed, you'll be able to take the right decision on investing in multifamily. So if you're looking for content that can help you decide if multifamily is the right choice for you, all you need to do is to subscribe to my YouTube channel, which is Blue Ocean Multifamily Group, or to my Facebook channel, which is Blue Ocean Multifamily Group. In there, you will see everything you need to know about multifamily, and we direct you in the right path to take. I look forward to seeing you in the journey of becoming financially free. Thank you. The next one is risk management. So at this point, you already have an idea of what your property is worth because you've done the job from the beginning. At this point, doing the risk management aspect, that is 6 months or 1 year towards when you want to sell, you need to watch the market. So you need to understand what is currently going on in the market, the interest rate or the cap rate. The reason why you need to understand what's happening in the market or take that into significant consideration is because the interest rate will affect the buyer and will affect the value of your property as well as the cap rate. The cap rate gives an idea of the value of the property. So imagine if the Fed is increasing interest rate, just like what happened last year, 2023. If the Fed is increasing interest rate, you should know that that will directly affect the cap rate. And if it's affecting the cap rate, that is, the value of properties are reducing instead of increasing, that time is not a good time for you to exit. So if you are within your 6 to 1 year goal, you might either take a decision either to still hold on to the property or you sell. So holding on to the property means if the condition is favorable, let's say the interest rate is good, I might just need to refinance, pull out the equity and continue. But if it's looking very bad and you just must exit, sales might just be the direction for you to take. So it's important when you're in your 12 months or 6 months towards your sale, the market trend and condition is a vital thing for you to take note of. You need to know how the interest rate is playing out, how the cap rate is playing out, how the market condition is. Is it a buyer's market? Is it a seller's market? If it's a buyer's market, you might need to take advantage of that time. Those are the periods where the value of properties are up. If it's a seller's market, you might need to look for more creative ways to ensure that your property sells faster and doesn't stay too long on the market. The next one is investors relations. You've had your investors stay with you for almost 5 years throughout the whole time of your deal. This is a time for you to take investors relations very, very critical because they're expecting their returns. They're not just expecting the capital or the principal that they put in, they're expecting interest or profit from what they've invested in. So this is a period where you need to be constantly communicating with them. And if you are going to be giving them the final distribution through different tranches, which are encouraged because you also don't want to sell or refinance your property and just distribute everything all at once. There are some after sales expenses that might come up and you need to cover. That is not supposed to come out from your pocket, it's supposed to come out from the sales of the property. Doing investors relations and period, you need to be communicating how you intend to disburse the proceeds, whether it's in 2 tranches or 3 tranches. It might be in 50%, then 30%, and 20%. The reason is for you to cover up any other income or any other expenses that you might incur after you've sold or you've refinanced. So that communication is very vital. Let's say because of the state of the market and you must exit, there are some issues. This is a period you need to start communicating to them and to also ensure that they have their expectations met. You need to clarify what exactly is happening and why you're taking those decisions. The last but not the least, everything I've mentioned is not limited to these things. We have other things you need to do during your 6 months to 1 year exit plan. These are just few things that we're taking note of during the entire process. The last one is market dependent. I made mention of when I was talking about NOI optimization and all that, but in this aspect, you want to also monitor the market, and if the market is not really favorable, you might need to delay the sales just a little and all that. But if you must exit, let's say you have your loan coming due and all that, you need to start creating strategies ahead of time to ensure that you mitigate the risk significantly. And also don't forget, like I said earlier on, communicate to your investors what route you're taking. Another thing that people forget to do is to also decide on the strategy. Are you going to do a 1031 exchange? Are you going to be giving distributions to your investors by cash or check, whatever that might be? You need to plan for that because you also don't want to give investors distribution and you'll be slammed with every tax liability. So this is a period where you'll be sitting down to understand what route do we want to take. Do we need to inform our investors that we'll be doing a 1031 exchange? Are they all on board with it? If they are not on board with it, what other strategies do I have that will help them mitigate the tax liability? So these are the conversations you should be having amongst yourself and as well as communicating with your investors. In other words, we are looking forward to exiting on 3 of our properties between 6 to 1 year, and these are some of the strategies I will be going through. I hope these tips were very good for you and you'll be able to apply them to your journey or to your deals when it's time for you to exit. Please have a wonderful day.